All right, guys, it's Paul Singh, the Market Speculator with bullsonwallstreet.com. Today, we're going to talk about how to profit from market volatility. And we're going to do that using the two Nvidia trades I've taken over the past few days here. Now, let's first start off taking a look at the market. And we can see that the market, or SPY, which we use to kind of assess the market, tanked on Wednesday, this huge gap down. And what often happens is traders will lose a boatload of gains here whenever we have one of these big drops. Now, logically, we shouldn't be losing that much. If you look at the market here, going back to January, we've been up from 223 all the way to 240. You should be trading pretty good through this period. Let's say you're up somewhere between 5 and 10%. Maybe you're doing really well and you're up 20%. Or even higher. Whatever it is, let's say you're up during this period. If the market pulls back here, you shouldn't be losing all of your gains. You might lose a little bit, and that's fine. But you shouldn't be losing everything, and maybe you're even profiting from this period. What happens to too many novice traders and unsuccessful traders, and this is why 90% of traders end up failing, is they end up giving up all of their gains back. Any one of these little runs here. They're over positioned, taking too much risk, maybe trading too frequently through this period, or they do not know what to trade. Now we're going to talk about how we handle these periods. Kunal and I did a really good webinar last year related to market sell-offs and how to protect yourself and how to move through going forward. So go find that. Maybe I'll put it in the link here when we put a blog post on this video up. And I've talked a lot about handling market sell-offs. So one of the things we do, I'm going to go away from protecting yourself. You can go look at that. But in terms of specific trades, we look for the stocks that are showing relative strength or weakness, that are getting really volatile, that we can play for quick trades. They're showing very good signals. Signals even better than the market. And we got that with Nvidia here. So even before the market sold off here, Nvidia was getting very extended. We actually played this, we're talking about two trades here. We actually had a really successful trade on the earnings breakout. We traded on this breakout day, rode it up here, took our profits. Then when it got to this position right here, we actually started talking about potentially shorting it because it was getting really extended to the point where if we got a good reversal signal, we would short. And what we were looking for was one of two things. Either it continues and then fails, or it breaks this candle. And we got the perfect opportunity when the market started tanking. And that was when it started to break this low in here. And that's when we took the short position. Now, this was initially supposed to be a swing trade, and even though it ended up as essentially a day trade, it's not what I consider a day trade. It was still a swing. It just hit our target very quickly. So we had to get out that same day. So we got in here at 130, I think it was 133.40, all right, as it was breaking this range here. And as it continued to slide through the day, I had a target range of 125 to 130. And when it hit 129, I decided to get out. We got a really nice gain, 4 points, really quickly. Basically, what I was looking to get, maybe after holding for a week or a few days, I got within hours. So we got out of that. Maybe it slid further. I just wanted to lock in that profit. We don't really know. But the next day, we were looking for one of two things, either continuation and getting short again. But what I said in the trade alert report, which was sent to trade report members in the morning, was we're kind of biased towards the short side, especially with what was going on in the market. But if we get a strong reversal signal, we will adapt. And as a good swing trader, you have to be able to adapt. You'll hear me saying that over and over again. You have to not have this confirmation bias, but you have to continually look at things with a new, fresh set of eyes. And when we saw the potential reversal play here, we ditched the short bias and went long. And towards the end of the day, when we saw the strength here, we got in, I think it was 132, I'll get the exact price here, 132.53. And ended up closing in the 133s. And then today, obviously, we got the big bounce off that, hit our target range again very quickly, holding for a day, but essentially the trade in market time was minutes because we entered near the close and we got out the next day at the open. And I got out today at 136.80. It did pull almost to 138 earlier today. Now has pulled back into 136. But you can see how we're trading a little differently than our normal swing strategy. And that's what you always have to be doing, is adapting to the market conditions. When the market is really volatile like this and you can't really predict what's going to happen because you don't know what's going to happen during the evening. We can't predict news events. Something could happen over the weekend that totally shifts everything we're looking at now in terms of political news. So we're trading much quicker than normal. So the normal, let's hold for a couple of weeks or even a couple of months. Right now, during this period, that goes out the window and we're trading really quick. And that's what you want to be doing in these volatile markets. And so far with Nvidia, we've essentially gotten 3 trades very quick. And within this sell-off, we've got 2 really quick trades. Now, today, if we get some kind of signal to short, we get a big hammer in here, a reversal candle, and then the market tells us something else. Maybe in a couple of hours, some big news event comes out related to the presidency or Russia, or we're thinking here. And we're going to continually to do that until things settle down and we can go back to our normal trading style. So remember that, guys, during market sell-off, a couple of things to do. One, there's nothing wrong with saying, hey, this is not the style I like to trade, so I'm going to sit out here. You can use cash as a position, and most traders are actually losing during these periods. So just being in cash, you're actually winning compared to other traders, and when things settle down, you get back to trading as normal. Now, if you're an aggressive trader and you have some time to devote to this, and if you're working full-time another job, if you have some periods in the day where you can look a little more closely, then you can do some of this more aggressive type of trading, but you have to be in and out pretty quick on these things. It's not day trading, but you should be expecting hold times of a day to maybe a few days rather than the normal few days to a couple of months. So that's how we trade the volatile markets. Actually, one aspect of how we trade the volatile markets, but study these Nvidia trades, study the market, and the next time this happens, or even next week if this happens, you can go to this aggressive trading style.